Good day. You are watching the second market update for Friday, 1st of June 2012, prepared by Windsor Brokers. As a number of data being released today, along with them quite disappointing US NFP, a lot of movements seen recently in the markets. The day started with the disappointing PMIs from Switzerland, Germany, and the Eurozone that came in quite disappointing levels, and all of them holding below 50. That marks the border between the contraction and the growing of the economies, with the especially disappointing results seen from UK, where the manufacturing PMI came at 45.9 compared to 49.7 forecast and 50.2 previous release. The negative tone continued to dominate from Canadian data, as GDP showed only 0.1% raise in the first quarter compared to 0.4% forecast. And the US data that came in very disappointing levels, non-farm payrolls, despite quite high expectations and the consensus of around 150,000 new jobs based on the average estimation, came at only 69%, and this is basically, as many of analysts commented today, a disastrous scenario. And also this increase fears of the further slowdown of the US economy, as some officials from US commented shortly after data were released, that were not fully aware and thought that the problem might be elsewhere, especially in China and Eurozone. But however, the problem came to their yard, and the current negative jobs data, despite, as I said, quite high expectations, came in very disappointing level. Initially, markets were in a choppy mode after the data being fully digested, and the expected reaction came that actually pushed the dollar lower, and there's a good recovery seen on the euro and sterling, while the crude oil sank to the lowest levels, close to $82 per barrel. And the main star performer of the day was gold, that bounced from a dangerous zone close to critical support at 1530, and in the recent trading hours it regained the 1600 level, our key resistance in the short term. We're going to take a look now in all markets and see the latest movements, and especially that it's the end of the week, some expectations for today's closing and the possible action on the opening of the next week. Euro, as said briefly before the release of US data, dipped briefly below 123 handle. 122.87 was low seen so far, followed with some choppy movements after the data, and the full speed taken after the markets digested the release of quite disappointing figures from US jobs for May, with the recent bounce hitting 124.54. Important was regain of one initial barrier at 123.65, 124, as well as 124.27, yesterday's high, with so far regaining 50% retracing, 50% of the short-term down move from 126.23 last week's peak, that bottomed at 122.87. Now positive tone is turning back in the near-term studies, as the pair is gaining the bullish momentum on the hourly chart, and the possibility of further extension higher is quite likely at this point, with next a very significant barrier at 125 zone, with regain of this level, and possible today's close at or above this level to signal some stronger recovery of the sinking euro currency that is in the strong downtrend of the recent peak of 1st of May at 132.82, and so far dipped approximately exactly 10 figures during a period of 1 month. So if we see today a regain of 125 and the possible close at or above this level, that would be quite good signal for the next week action to extend the recovery. Still prevailing downtrend on the euro needs to be confirmed by regain of minimum 125, possibly 126. That will give more boost to the single currency. Otherwise, this current move would be just seen as corrective and further weakness, and possible retest of possible test of our next downside target at 121.50 would be the likely short-term scenario. The British pound also bounced after hitting a fresh low today at 152.67, loss of 153 zone that was expected to give some more support to the pair, was actually quick as the negative data released from UK today. PMI data pushed the cable significantly, pushed the sterling actually significantly lower. 152.67 was low seen at midday today, and followed by brief recovery, and then a strong rally on a negative US data that pushed the dollar's counterparts at the higher levels. The pair so far regained 38.2% of the recent down move from 157.15 to 152.67 at 154.38, breaking briefly above our initial resistance at 154.28, with the levels still to be seen in order to confirm a current recovery. Immediate barrier is dynamic resistance at 154 to 42, 20 days, 55 days exponential moving average, and yesterday's lower platform at 154.60. A break above 155.30 zone would be quite supportive for the pair, and a possible close today at above these levels would be good signal for some stronger recovery of recent strong downtrend from 163.00 first 30th of April's yearly peak of the pair. However, as the pair approached its yearly low at 152.33 with the 152.67 seen so far, still stronger downtrend continues to keep the downside vulnerable, and unless we see a regain of a minimum 155.30 and even better 156.00, risk will be seen still towards the downside. A regain of 156 as initial strong level, and 156.40 previous range bottom would be signal for a more significant recovery of the pair. And the dollar yen continues to dip lower with some sharp movement seen on the release of US NFP data at 77.65, 78.65 was the range within a couple of minutes after the market stabilized at levels around 78, following the brief break below this level. Loss of previous strong and significant supports at 78.60 200 days moving average and the 78.30-20 zone previous September to December 2011 range top keeps the risk towards the downside, and unless we see a regain of minimum 79, first today's peaks at 79, 78.64 and 79 as a previous low and previous base posted on 18th of May, not much to be expected of the current recovery as the dollar gets weaker against I guess across the board. Most likely the further weakness of dollar yen will be seen, and the possible full retracement of the short-term, medium-term rally, from 76.00 to 84.17 would be quite likely. A regain of 78.64 as said today's high, as well as 200 days moving average would be the first signal of stronger recovery, with the regain of 79.00 required to ease the current bear pressure and confirm the further corrective action towards the upside, with the 80.0013 and 80.60 seen as the next stronger barriers at the upside. The dollar Swiss suffered from the recent dollar's weakness as a strong rally peaked today at 97.69 just before the US data released, and then subsequent sharp decline broke below our initial support at 96.64. This is the low of yesterday, and extending losses to so far to 96.37, between 50 and 60% Fibonacci retracement of the later rally from 95.27 to 97.69. Still, the bullish outlook on the larger pictures remains intact. However, weakening studies on hourly chart and loss of initial bullish momentum might be signal for some stronger movements towards the downside and further retracement of the latest upleg, with the significant levels next one seen at 1961.8% retracement, and then stronger resistance at 96 zone previous highs, and also close to peaks of recent tops at 96.09, and basically only loss of this level would be significantly weakening the current structure. Next strong supports are at 95.27 and 95.00, while loss of these levels would put aside the short-term bulls and allow for a deeper reversal, with the 93.66 next key support, high low of 21st of May expected to come in focus. Any reversal above 96 would be seen as immediate continuation of the broader uptrend, and the likely scenario would be higher low and a fresh attack higher. However, if current negative data from US will be having a stronger impact on the US dollar, then we might see some more significant correction of the broader uptrend of dollar Swiss. Mentioned at the beginning, gold was the top performer today after bouncing from low of 2 days ago at 1532 and today's low at 1545, with significant rally regaining initial barriers at strong barrier at 1583 and the more significant 16.0 and 16.16, 61.8% retracement, sidelining immediate risk of scenario that will be testing a critical support zone at 15.30.20, loss of which, of course, to trigger a more significant corrective action of the broader uptrend of yellow metal in past 10 years that rallied from approximately $300 per ounce to close to $2,000 per ounce. Current price action brings more positive tone into the gold's price and gold's movements, and looks for a further signals for a further recovery towards the upside. And next relevant barriers coming at 16.23, so we are just close to it, and then 16.71, the previous high of 1st of May, that will again of which will confirm the full retracement of the 1671 to 1526 rally. Especially today's close above 1600 level would be a great support for the yellow metal for the next week's further extension higher. As said, the crude oil remains under heavy pressure as today's fresh losses extended as low as 82.55, bringing immediate focus towards very strong support at 80.00. The lows of 80.00, that loss of which will open way towards next significant levels at 74.94 and the 75.70 and 74.94, lows of 2011 August and October, beginning of the latest strong rally that peaked at 110.50. On the near term, studies are extremely extended towards to the downside, and some technical corrective action might be seen. From the fundamental side, there's not much to say, as quite negative data released today regarding the world economies showing that a further slowdown is very likely. That will be also triggering a lower demand for the energies, keeps the strong pressure on the crude oil's price. That was all for our second update. We'll be back on Monday morning at our regular time at 7:00 GMT. Good luck.